folks, Scott here, and this is the wrap for Tuesday, April 23rd. So a bizarro day. Was setting up to be a fantastic day, and ended up being a little bit of a disappointing day, but I'll talk more about that in a moment. Let's first talk about what tomorrow may bring us. And it's about 2:45. I've got a child's track meet this afternoon, so I'm having to do this a little bit earlier. But I'm making the assumption that today's gap is going to remain unfilled. It narrowly missed it with the anomaly, the blip that happened that I'll talk about in a bit. But technically the gap is unfilled, so I thought it'd be interesting to show you the results of fading gaps after an unfilled up gap that closed above the 10-day moving average, but was not a 10-day high close. So a number of nuances, but just trying to sort of capture the essence of what this trade will represent. And technically, if it closes around yesterday's highs or below, it will not be above the 10-day moving average on the cash index. So I'm assuming we're going to close above it. If it doesn't, then disregard this data. It's just a piece of information that may not be relevant tomorrow. Okay, so unfilled up gap closes above the 10-day moving average, while above the 200-day moving average, but not a 10-day high close. Using an end-of-the-day stop, some strong numbers, especially for shorting. 82% win rate, decent sample size, 1.9 profit factor. These are really good numbers. Slight bias for gapping down the next day, and it looks win rates is average to slightly above average, but been a money loser, significant money loser, most of it there from one trade. So when I rerun these numbers with the MTG stop parameters, more likely than not it will be probably a neutral gap trade to the downside, worst case. So looks to have a slight bias for shorting tomorrow if this gap remains unfilled. All right, let's talk about today. And let's see, I'll take you to the worksheet first. So there were sizable gaps up above the prior highs, I believe in all the indices, yes, all the indices today, and it was right at my criteria of 60 and 1.3. Just a tad weak, right? I'm looking for 59 and 1.31. So on the surface, pretty good setup. No unique day factors that were positive or unique patterns in general that were positive or risky. So let's look at the guide. You got to dig in further to evaluate the setup. On average, the weighted average looked good, but it was fringe for sure. So if you look at the ES, didn't quite meet my criteria. The weighted average of our three systems, 58 and 1.2. YM did not favor it, 50 and 1.0 basically. However, the NASDAQ did and the Russell did not. So that's why you do need to look at these guides, especially when it's close like this. 3 of the 4 futures didn't favor this move. And I tend to believe the futures lead a little bit more than the cash indices. Looking at the ETFs, Spider right at my criteria. Diamonds did not. Q's did, and Russell did. So technically only 3 of the 8 indices met my criteria. So I'm really on the fence there because the overall weighted average was positive, but we had sizable gaps. In fact, I'll talk more about that in a moment also. Let me show you my pre-market assessment. So when I get in the situation, I just do additional work and also recap what I showed in the prior night's video, but with our MTG stop parameters for our members. And last night I talked about fading up gaps after 2 higher daily closes. So a little bit of recent strength, but when still below the 10 and above a 200-day moving average. Just a neutral setup, but neutral to slightly weak setup. Small and mid-size up gaps when below the 10 and above the 200. Not following a 5-day high close nor a 5-day low close. So again, sort of back mid-range is what I'm essentially trying to show there. It has shown risk for shorting up gaps. Looking at it by zone, the zone really matters. So UH zone again was just slightly weak. There was just nothing overly compelling here for me. And even though the guides and everything overall was neutral to slightly attractive, this mixed data was enough to keep me on the sides. As I said, they're not a terrible gap fade setup. It's not compelling either based on history. So I'll wait and take my cue from the range trades. Now, if I'm on a roll and gaps have been working well, markets conforming well to history, I've in the past traded marginal setups like this with like a half-size trade or a speculative position, but not on the heels of getting stopped on a high probability trade on Friday. In general, I'm not going to do it. I just didn't think it was compelling, and what I didn't account for, because it did not matter, but what happened going into the open? I don't have glowbacks on this workspace, but we rallied about 3 points into the open. The market was trading down just above the highs, and it rallied into the open. That actually made it more than 40% of the 5-day ATR in size. Let me take the 5-minute chart, meaning it ended up triggering at that key level that I paid close attention to see if there's unusual risk or not. When you get a gap this big, it generally denotes a higher probability of a breakaway gap. So when I saw it rallying, it just further confirmed to leave it alone, and actually it made it neutral to weak setup, as I explained in the trading room, as it happened when I popped in the trading room this morning around 9:20. So I passed on it. Great decision. Would have stopped me out in any market that you traded. So good call there. Continue to navigate fairly well, again, with Friday being really the only exception here the past few weeks of not navigating these tumultuous markets. Now, I know you're wondering what in the world that is if you happen to not be trading today. That is what happened when somebody hacked into the AP Twitter feed and posted that the White House had a couple explosions and the president was hurt. I had already profited 4.25 points on the ES high breakout. Really strong, compelling numbers on the high breakout from our range guides. The first hour numbers also favored the high breakout. Because I was still in the ES, I passed on adding to it. The Russell, though, both high breakout triggered for 15-minute and first hour, so I used what was at a full position size for the Russell. It was slightly reduced for the 15-minute. I added to it to make it equivalent of a full position size for the high breakout on the Russell, which was just acting beautifully ahead of the announcement. It had already moved more than halfway and was just setting up for a potential parabolic move. News came out. I was not at the desk. Stopped me out. I lost. Stop today was 4.9 points. I was very close to making 3.2 points. So I lost 4.9. Frustrating as all get out because this whole move happened in 1.5 minutes. 1.5 minutes. Now, I don't know. Normally when I see big check and volume spikes, this is what the gold bars mean, and usually high volume. Market sort of creates a vacuum and you lose a lot of support. So my belief is this is part of the market just sort of backfilling into this vacuum, and that will hold into the close and we'll make it a gap gotcha. I won't be here, unfortunately. I'll be at my kids' track meet, but pretty frustrating actually. This is only the second time we've had anything like a flash crash in the futures that I can remember trading. Certainly in the past, I really can't remember. Maybe it's something that happened in 2004, but it doesn't matter. In 2010, we had the big flash crash that affected all the markets. It was much bigger than this, but this was big enough. The low breakouts had some decent attributes, so I'm sure I haven't got an email yet, but someone may have been set up to take the low breakout. You would have had a loss here and a winner over here, so they would have roughly canceled each other out. But I was going to only enter them on a pullback, or I should say a bounce, to get short had the market action been normal. But that was not to be. So interesting day, and a little disappointing considering I thought we were going to end up with a pretty significant positive day in the trading accounts instead of being negative. But didn't lose any more than I'd planned and lost less than I was prepared to lose today because I had that first winner, so that helped. Anyhow, have a great one. We'll see you tomorrow. Take care.